for quite some time. So, Jenny, always a pleasure to have you joining us. And I know you were taking a look at Oracle and some different social media posts regarding Oracle. What were you seeing?
Yeah, so Oracle, of course, not the sexiest name on social media, but the price activity in the name is super interesting. So they're up about 2.5% year to date, about 1% in the month of June thus far. But more interesting than that, they've rebounded about 30% from their March lows, which of course was when the broader market sold off due to pandemic-related headwinds. So they've done a really good job kind of rebounding from those March lows. And there's actually a lot going on here that I didn't realize. So Zoom Video has picked up Oracle as their new cloud provider. Now, Zoom, of course, has seen crazy increased demand from stay-at-home orders. They're up about 250% year to date, which has obviously been a good thing for Oracle. But Oracle's kind of focused on the growth side of things. So currently, the company is in the process of transitioning from legacy software to a cloud-based subscription model. So last quarter, they generated about 71% of their total revenue from this cloud-based subscription model. So that's kind of how they're making the bulk of their revenue. They also forecasted subscription revenue growth to grow about between 3 to 5% in fiscal fourth quarter. So all of these numbers seem like a really great thing in terms of growth. However, when you go to social media, the tone kind of changes because it seems like there's still the idea that they're lagging course, the Amazon, the Microsoft, the Alphabet, because how do you compete with these giants when this is just one tiny way these companies make their money, and it's basically Oracle's entire revenue base. So that kind of brings me to our first tweet, which is from Pete Smith, who says, Oracle has been growing its public cloud business, though it remains far behind market leaders Amazon, Microsoft, and Alphabet. But Oracle is vulnerable to weakening economic conditions, and there are fears on the street that near-term results could miss. So, of course, this is kind of the overarching bearish sentiment when it comes to Oracle, but then I had to find a tweet, of course, that had some bullish sentiment. So our next tweet says, Oracle, same statement as I tweeted before, still undervalued in my opinion. Looking at other known competitors, this is still fairly cheap with potential, might make some long-term plays. So, of course, when it comes to looking at this name, we're seeing completely conflicting tweets here with a market maker move of about 3% or $3, excuse me. Kevin, how would you go about trading this stock going into earnings post-market today?
Yeah, good morning, Jenny. And, like I said at the beginning of the show, the two names we're talking about today, Intel and now Oracle, these are the tortoises. In the tortoise and the hare show, these two are the tortoises. And you're right, Jenny, a lot of the frustration with investors about Oracle has been frustration that they're not growing fast enough. 94% of their income stream is cloud related, but they don't seem to be getting there as quickly as some investors would like. This is another one of those names, much like Intel, very low premium in some of their options. So you really have to search for the option combination like we did in the Intel trade that fits, the most efficient way to trade. So, the implied volatility in Oracle is still unbelievably historically high, even though it was higher. So we'll look for something in the short Vega category, but this is another one. It moves very, just very slowly, and it just doesn't have the volatility that some of these names have. We'll trade it anyway, but we got to figure out a way to passively trade this, guys.
Yeah, and Kevin, we'll look at that at the end of the show. Jenny, we want to appreciate you joining us as well as we say goodbye. Thanks to Jenny Horn, and welcome in Andy Swan, the co-founder of LikeFolio.com, to continue the conversation. Andy, it's crazy. I mean, if you caught the beginning of the show, we talked about Intel and AMD kind of being a David versus Goliath scenario, and an argument could be made here. Oracle versus Amazon, Oracle versus Microsoft, Oracle versus Alphabet. They're, arguably the David, even at $150 billion market cap versus some of these other mega cap companies.
Yeah, they're not the big name, but they are extremely consistent. That's what we found. They have such a huge base of subscription model revenue. Like Jenny said, that's 71%. And when we look at it, look, most people don't talk about when they purchase from Oracle. It's a business to business for the most part, but we did dive in and look a little bit at people talking about getting on a Oracle subscription, and that has been consistent. Like we've been talking about, consistently up and to the right for the past few years, near all-time highs. I think that Oracle's just kind of doing a good job of growing its business. This is a conservative company in a lot of times what's a flashy space in the cloud, and I think they're doing a pretty good job. You can see from the stock before COVID hit, this is a stock that barely moves. I mean, it's pretty flat along with everything that they do. This is a company that just kind of churns out results, kind of the tortoise and the hare type of thing. I think it's a good company. It's interesting that they won the Zoom contract as Zoom was, growing really, really quickly as the work from home movement started. I thought that was really interesting that they won that contract. It's also interesting the way they put it out as a press release. Makes you wonder how much they had to give up in order to get that flashy of a deal. But yeah, Oracle here, kind of one of those often ignored players, a little bit safer bet. They do just kind of consistently deliver on expectations, don't really beat anything in a big way or really ever disappoint in a big way. So, we see more of the same from our perspective.
Good morning, Andy. Heads up for our viewers. The reason David and Goliath is a good story is not because Goliath won. It's because David won. So, Oracle being a David and Goliath story isn't the worst place to be. But Andy, here's my question. And this one's pretty simple because Oracle is almost boring, and it's, even your chart is much like the Oracle stock chart. It's just slowly moving from the bottom left to the upper right. It's very methodical. But did the Zoom deal for Oracle make Oracle sexy again? Did you see any notes or any indications in some of your data that the Zoom, Oracle hooked up with Zoom made it actually cool and flashy and sexy again?
Yeah, I wouldn't go that far. I think they got a nice little bump out of it from an investor relations perspective. I'm not sure that it did a whole lot for the brand perception. I think, it is impressive. Look, it is impressive that they were able to onboard Zoom, get that working apparently they got it working within a few hours, and we're hosting enormous amounts of data. I think the last time I checked, each day Oracle is hosting 93 days worth of high definition video. I mean, it's just absolutely insane. Or 93 years. I don't know. The number's just out of control. And so a lot is going through Oracle. They were able to spin it up really quickly. I think they made themselves in the conversation because of the Zoom deal. They put themselves in the conversation. It's just not automatically going to be Microsoft, Google, or Amazon. And so that's interesting for Oracle. Could be the type of thing that gets them to break out. But like we said before, this is mostly business to business. These deals take a long time. Maybe Oracle's going to start showing up on some radars in the future. But generally speaking, it would take quite a while for that type of difference to be seen in the company's revenues or stock price.
So, Andy, fill in some blanks here for me, because some of the things that I'm gathering from listening to you to listening to Jenny and some of the stuff that I read is, hey, some of the negatives maybe with a company like Oracle is they're spending a lot of money and working on transitioning from the legacy licensing model to subscription. On the positive side, they're doing pretty well at that. 71% of their revenues, as you both said, coming from that subscription-based model. On the negatives, they're going against some of these giant companies, AWS, Microsoft Azure, Alphabet, and Google Cloud. And so that's a negative. But on the bright side, it's in cloud. Cloud is one of the areas in the market that's growing the most. And if there's a pie that's growing, you'd rather be trying to steal a part of a pie that's growing than one that's shrinking or staying the same. And so, what am I missing? And is the most important thing, that trend that you're following, that move towards subscription, is it's a little bit more visible. It's a little bit more of a stable recurring revenue stream. Is that the most important thing, or one of the most important things that we hear from Oracle when they report earnings?
definitely is. I think that this is a company that's trying to emulate what it's seen in the successes of Microsoft and the success of, even Adobe, which is outside of cloud computing in a lot of ways. I think subscription is, clearly the winning business model of this current time period. But what bothers me about Oracle is that it seems a little late to the game in everything that it does. And, this is a conservative company. You can see that in the stock price. This is one of those. I kind of think you put it on your radar when the market gets a massive sell-off that takes Oracle down with it. You take a look because Oracle's very consistent in what they're going to deliver. And so when the market is inconsistent, it can give opportunities on consistent companies, and that's about as much excitement as I can generate for Oracle